Most people think QQQ and QQQM are basically the same investment, and honestly, that's exactly why this story matters. Because these two ETFs track the same Nasdaq 100 index, hold many of the same giant tech names, and move almost the same way in the market. But hidden inside this tiny difference is something that could quietly cost long-term investors hundreds, thousands, or even more over time. And the wild part is, a lot of people buying QQQ every month may not even realize there's another version built more directly for them. Hey everyone, welcome back. I'm Henry, and today we're breaking down QQQ versus QQQM, two Nasdaq 100 ETFs that look almost identical on the outside, but are not exactly the same once you understand how they're designed. Now, QQQ is famous. It launched back in 1999 and became one of the most recognized ETFs in America, especially for investors who want exposure to big Nasdaq names like Apple, Microsoft, Nvidia, Amazon, Meta, and other major growth companies. It is heavily traded, very liquid, and extremely popular with active traders and options traders. But here's where things get interesting. QQQM tracks the same Nasdaq 100 index, but it was created later as a lower-cost option for investors who are not trying to trade in and out every day. In simple terms, QQQ is like the high-speed trading machine, while QQQM is more like the long-term wealth-building version. And the key difference comes down to fees. QQQ's total expense ratio is listed by Invesco at 0.18%, while QQQM's expense ratio is 0.15%. Now, I know what you're thinking, Sagar, that is only 0.03%. That sounds like nothing. But trust me, this part matters. In investing, tiny numbers become big numbers when time and compounding get involved. A small fee difference may not feel important over 1 year, but over 10, 20, or 30 years, especially with larger portfolios, that difference can quietly eat into returns. And that's why many long-term investors are now looking at QQQM and asking a very simple question: why pay more for almost the same exposure? But here's the twist: QQQ is not useless. Not even close. For traders, QQQ can still make a lot of sense because it usually has massive trading volume, strong liquidity, and a deep options market. That matters if someone is moving big money, trading frequently, or using advanced strategies. But for the everyday investor who is buying and holding for retirement, building wealth slowly, or investing every month, QQQM may be the cleaner choice because the lower fee works in your favor year after year. And honestly, this is where many investors get confused. They see the famous ticker, they recognize QQQ, and they assume the most popular option must automatically be the best option. But in the ETF world, popularity does not always mean best for your personal strategy. Sometimes the less hyped version is actually the smarter long-term tool. Now, there is one important warning. If someone already owns QQQ in a taxable brokerage account, selling it just to switch into QQQM could trigger taxes if there are capital gains. So this is not a simple sell everything today situation. For some investors, it may make more sense to keep existing QQQ shares and direct new money into QQQM. But the bigger lesson is clear: before buying any ETF, don't just look at the name, look at the purpose. QQQ is powerful for traders. QQQM may be better for long-term investors. Same index, same general exposure, but different design. And that tiny fee gap is exactly why this debate matters. So here's my question for you: are you Team QQQ because it's the classic, or Team QQQM because of the lower long-term cost? Drop your answer in the comments, because I really want to see how investors are thinking about this. And as always, this video is for education only, not financial advice. Make sure you do your own research and talk to a licensed professional before making investment decisions. If this helped you understand the difference, hit like, subscribe, and I'll see you in the next update.